So chapter 2.
So we're going to talk in chapter 2, which starts on page 5, we're going to talk about the concept of money mapping. We don't like to use the B word, the bad B word called budget. It's kind of like the word diet. What do you think of when you're on a diet? Starving. You can't eat. What do you think of when you're on a budget? Broke. I can't spend. It feels very restrictive. So we wanted to kind of throw out those concepts. One other important thing about being on a diet and being on a budget is you go on one, and then what happens? You go off of it. Whereas if you're looking at a money map, it gives us direction with our money. There's really no, going on a money map or going off of a money map, but it's following something. It's following us to where we want to be financially. It's, a little bit of semantics and what works, mental gymnastics, if you will, but it really gives us a different outlook instead of that, that restrictive budget word. So what are the 3 things that you can expect when creating a money map? Well, a couple of things are happen. First, you're going to understand how and where you spend your money. Really important. Then you're going to become aware of your cash flow. We'll talk about that in a minute. And then most importantly, it's going to give you some control of your finances and control of your future. I think this is really important when we're talking to our customers, is that going through this process of money mapping is going to give them control, because we all want to be in control of our lives. Okay, so the first part of mapping your money is understanding the money that's coming in. What is your income? There are 2 sources of income. First is earned income, that money that you work, and you get your regular wages. You may have tips, you may have bonuses. So again, and this is where we want to focus our customers towards that earned income. And you can see there's a photo of Kimoko on the screen. She is proudly holding a copy of her paycheck that she's earned at a pet store. The second form of income is unearned income. So you're not doing anything to receive this. You're not working. You don't have any efforts the fruit of your efforts, so to speak. And this is Social Security disability, maybe SSI. You may have gifts, and you may have interest on your savings accounts or investments. So it's important to know, again, earned income and unearned income. Gross versus net. I remember when I received my first paycheck, I said, wow, who is FICA and why is he taking my money? The reality is we don't get to take home everything that we've earned. So we need to know the difference between gross and net. Gross is just simply that. It's how much are you making per hour times the number of hours that you're making. Nothing is taken out of it. This gives us our baseline. But then net earnings are what's left over after we have the deductions from our pay. And they can include taxes, income taxes, federal, state, local income taxes, Social Security taxes, Medicare tax. You may be paying health insurance premiums. You may also be paying life insurance or disability premiums, other insurance. And then you may be saving for retirement. So these are some of the deductions from our pay that give us our net earnings. So on page 8, this is one of our activities. The activity is number 4. We need to actually write down the sources and amount of our income coming in every month. This is going to be a key number in our future calculations and future money mapping. So you can see there's a worksheet here which allows you to do that and allows you to help your customers do that as well. So you end up with your total monthly income, your unearned and your earned and amount.
And then the next part of doing your money map is obviously figuring out expenses. What are you spending money on? Whether you're paying in cash, by credit card, check, there's money going out. So obviously these are things like groceries, your personal care items, transportation, clothing, entertainment, health insurance, copays, things like that. So it's important to then sit down and realize and track all your expenses. And this is from the booklet on page 10. It's under, I believe it's under the income. We write down every expense we make. And when you are building your money map, it is really important to write down everything. Side note, if you go to Dunkin' Donuts every morning and buy a $2 cup of coffee and you forget to write that down, it's sort of leaking out the side. So it's a spending leak. So it's really important to track every single expenditure that you have when you're building your money map. So you want to write down every expense. Then you want to categorize them. Are they under food? Is it entertainment? Is it transportation? Utilities, things like that. And then we need to go through and check if it's a want or a need. And when you're working with your customers, it's important to, again, remember they might think it's a need and you might think it's a want, and you want to be very cautious in how you approach them and saying, well, that's not quite, that's more of a want than a need because of, we want to be careful on those money values and judging other people and their decisions, but we want to also help keep people on the right track. So when we're done with tracking every expense, we find out what those expenses are going to be. We want to see if there's recurring expenses. So is your rent the same every single month? Probably. Is your car payment, if you have car payments, your utilities, cell phone bills, that's usually a pretty similar cost every single month. So you organize your recurring expenses so that you can help build that into your budget if something's not wavering. And again, check if it's a need or a want. Then we want to look at credit card expenses and organize those credit card expenses in the same fashion. We want to see, are they, what categories are they going in? Is it a recurring expense? If it is recurring and you already put it on the first worksheet, do not put it in the second one. But anything that's extra and above that might be different, birthday presents, concert tickets, DVDs, things like that, you want to add that into this list and check if it's a need or a want. Because if you're going to find out later on, as we look at the cash flow, we need to be able to go back and see where maybe mistakes are or tweaks can be made. So we're going to check if those are needs or wants.
For bringing it all together, I would actually encourage you, if you have your booklet, to turn to page 14. It sort of, it's visually a little more appealing. So really what you're looking at doing is we're going to calculate our cash flow, and how do you do that? You're going to write down, copy all of your needs and the amounts, total those up. You'll need to copy down all of your wants and total those up as well. Add your total needs, add with your total wants to come up with your total expenses going out, essentially. Then you're going to write down your monthly income. You're going to subtract your expenses from your income, which is going to give you your cash flow. Does that make sense? So all of your needs, all of your wants go against your income to find out what your cash flow is. Now, cash flow is a fancy word for saying income minus expenses, or what comes in and where does it go. But it tells us some very important things about our situation. If there is money left over, which means there's a surplus, that's great because that means you're spending less than you're earning. And you can take those extra dollars and you can put them towards your financial goals, or you can just save them, if you will. Now, it's interesting, there's a picture of Suzanne on the screen, and Suzanne is using a Braille pad and a headset to make a savings deposit at an ATM. So it's great. She had a surplus, and she's saving that difference. Now, if there's not enough money coming in, or you have a deficit, so you're spending more than your income, well, this is troublesome, of course. This is really sort of a cause for a lot of financial concern. And how do you make up the difference? Like, where does that money come from to take care of your expenses? Well, it means you have to take it out of savings to pay those bills, or you might even have to borrow in order to meet your expenses. So that is really something that we want to reevaluate and look at. And when it comes down to it, if we're trying to spend less, we're going to have to look at our wants first. And again, that goes back to Becky's introduction of needs versus wants. What do we actually need versus what do we want? And you can see a picture of Patty there. She's in a deficit, and she's very upset and frowning that she's got to do some changes in order to bring her cash flow into balance. So to spend or not to spend? We are inundated with images of spending. You turn on the television, the advertisements, we want this fancy car, we want these clothes, we want to go here because it's going to make us happy and do this and that. But the reality is we have to think about some smart ways to do some of our shopping or do some of our spending. First of all, take a shopping list with you. Really important, write it down and stick to it. I wish I could do that all the time, but use coupons, look for sales. If someone is willing to give you a discount, take it. Just saying. Don't go food shopping when you're hungry. Yeah, that's my weakness here. And then don't shop just to cheer yourself up. That retail therapy just doesn't work all the time. Then ask yourself before making a purchase. First of all, is this purchase, if I make this purchase, will I have money to take care of my needs? I think that's the first question we really ask. Am I buying this? Is it going to sacrifice something I really need to take care of? Do you need this item? Will I use it? Will I wear it out? Or is it just, going to be another pair of shoes lying in your closet that never get worn? I don't know anything about that. Should you wait a day? Or, take some time to think about it. Maybe it doesn't seem so urgent tomorrow when you think about it. Should I wait till it goes on sale? Well, of course, we should never pay full price for anything, but that's Holly Chase talking. Okay, can you find this item at a better place someplace else? And that last point kind of comes to comparison shopping. It's not just about price. It's really about some other things to consider when making a purchase. Now, this is a screenshot from the website, which talks about the comparison shopping. So it's activity number 10. The thing we have to look at, this person is deciding whether to buy jeans and where to buy them. Okay, we're looking at the price of the jeans. That's, obviously something to compare. We also want to look at the location. Where will this person be buying them from, and what are the hours of those stores? We're going to look at, are there any other expenses that go along with this? For example, are there shipping costs, or you have to pay extra transportation costs to buy this item? And finally, look at other things when making the purchase. For example, do you just want to go to this store because it's a really fun place to go? Okay, maybe. Or is it there are restrictions, like I can't try the jeans on, or there's no return policy, or they may not have my size. So these are the things we look at when doing comparison shopping. It's not just about price, it's about all of these other things that can add up to the total cost of this item. So really think about that before going shopping. I don't like to think when I have to go shopping. So I'm going to turn it over to Becky now.